Have you ever heard of peer-to-peer lending? Well, there are people who may want to borrow money but may not be able to get loans from banks, and that is due to several reasons like lack of collateral, low credit score, already running loans, etc. But they still need more money, and such people approach other people and not banks to take loans from them. And this is called peer-to-peer lending, which is exactly a type of crowdsourcing used to fund loans that have interest attached to them. And this can also be described as the process of providing unsecured loans through the use of an internet marketplace that connects the lenders to the borrowers. This P2P lending can be beneficial for both parties in many ways. Now, lenders may be able to earn much higher returns than bank savings or other investment options, while borrowers may be able to obtain lower loans at a much lower interest rate than the banks or NBFCs. Now, there are P2P lending platforms and companies that actually connect these lenders or investors who have a surplus amount of money and they are willing to lend to earn interest on them as well, with borrowers who may need money and who are willing to borrow by paying that particular interest. On these platforms, a lender can check the loan proposals from various borrowers on the P2P lending website or the app, and the lender can then evaluate the loan proposals on various parameters and accordingly decide which borrower they would like to lend to and the amount that they would lend as well. Now, the returns for investors or lenders on these platforms can range anywhere between 9 to 18% per annum. Now, all the P2P lending platforms are actually regulated by the Reserve Bank of India, so it is a legal business recognized by the RBI and the Government of India. Now, the RBI has categorized P2P lending platforms under NBFCs as NBFC P2P. Now, should you really lend through P2P lending platforms? Well, only if you are looking for an additional source of income, you may consider lending some of your money through P2P lending platforms. But that, of course, financial advisors do say should be only and after when you have diversified across all the other investment instruments that are actually considered a high priority investment option for you. Now, what are the risks involved for you here? Now, P2P lending is definitely a high risk, high return investment product. The major risk for investors or lenders here involves the delay or the default in receiving of the interest and the principal. Now, some platforms here lower this risk by diversifying their money across multiple borrowers as well. Now, what exactly are the documents that are required for P2P lending? It's similar to a bank. You may have to furnish your Aadhaar card, a PAN card, and other common KYC documents that would be needed. In addition to the CIBIL score, the P2P platforms will also utilize additional metrics to analyze the loan applicants as well. But definitely do speak to your own financial advisor before taking a call if you are a borrower, whether you should go for P2P lending, and if you are a lender, whether this platform will definitely provide your own portfolio or investment interests some bit of better, higher return possibilities than the other investment options.
If you like the video, do like, comment, share and subscribe.